Hi dear friends, today is Wednesday, September 24. As usual, we discuss the charts of the most popular Forex instruments and make up efficient trading plans. Both the euro and the pound sterling traded sideways yesterday. Nothing special happened. In the first half of the day, traders were disappointed with a tipped manufacturing PMI for the Eurozone in September. The PMI declined from 50.7 to 49.5. So the manufacturing sector has been losing momentum. They kept the bullish potential of a single currency. On the plus side, the services PMI was higher than expected. It offset the downside. The same story happened in the UK. The British manufacturing PMI sank even lower to 46.2. The services PMI slipped from 54.2 to 51.9. However, it didn't exert strong pressure on the pound sterling. Now the market is in equilibrium. The US economic data also discouraged the market with worse than expected figures. A good point is that both the manufacturing and services PMIs remained above 50. It means expansion, not contraction, like in the UK or the EU. As for the Powell speech, which was a pivot point yesterday, he confirmed risk for the labor market and inflation. He also reiterated that Fed officials had to make hard, well-grounded decisions on further rate cuts. He evaded comments on the policy decision in October. Inflation faces the risk of acceleration in the short term, and the risk for the labor market is soft hiring. All this creates a complicated situation. Now let's check the economic calendar for today. In the first half of the day, we get to know a business climate index for Germany, including the current assessment and business expectations. If the indicators surpass the consensus, the euro could try to regain losses. The calendar is empty for the UK. New home sales are due in the US. Besides, some Fed policymakers are going to make their comments. Recently, the Federal Reserve has been split into two camps. Today, we will find out which camp Mary Daly supports. Now let's discuss technical issues. The picture hasn't changed much since yesterday. The euro-dollar pair went down and made a false breakout at 1.1778. So we have an excuse to plan long positions aiming to reach 1818. If broken, the door will be open to 1847 and 1882, where I consider sell positions during a bounce, bearing in mind a 25-30 pips correction. Another scenario is to open short positions at 1847 during a false breakout with a target at 1778. If the level is passed, we could expect a drop to 1762 and even to 1726, where I will plan long positions, bearing in mind a rise of 25-30 pips. The same trading plan is valid for the pound sterling. A breakout at 34.89 during a false breakout is a good reason to buy, with a first target at 35.34. If the bears are active there, we should open sell positions aiming to reach 1.3489. If the bulls don't enter the market at 34.89, we could sell further with a target at 34.55 and even 1.3419, where I will plan buy, foreseeing a rise of 25-30 pips. I will also open long positions at 34.55 and 33.89 on the condition of a false breakout. If I don't see robust bearish activity at 35.34, I will wait and go short at 1.3568 during a false breakout or during a bounce at 1.3605. Good luck.